What's up, everyone? How you guys doing today? No packs? Well, it hasn't. If you want it to be. What's up, guys? Ugh. If Opex, then wait for Monday. Don't try to jump ahead. Yeah, that's one way of handling it. My positions on GME that I bought last week are already up, and I kind of halfway regret not just closing them early, but we'll see what happens. Nvidia 500 finished squares. um, we'll have to find out. I mean, Nvidia had what? You said like 10 million delta fell off the chain on the call side. So that might not be good for it, but they also have their stupid convention this week. That's what I said. I said 10 billion. Didn't I say 10 billion with a B? I'm late. Have a great Sunday. I'm gonna be behind the whole time. Okay. You too, Matthew Hodge. Good morning, Brewski. 2 minutes after, and I'm late. What happened to the 27-minute intro? I didn't do the intro because I was running a little bit late today. I have cancer surgery Friday. I hope I won't miss out on too much the week I'm in the hospital. Oh shit. I'm sorry to hear that. I hope you recover quickly as well. Blue Pickle, welcome to Dillionaire. Thank you so much, man. Hit me up on the Discord. I'll get you added to the country club after the stream.
Happy birthday, Gert. Yeah.
Obligatory Google to 110. Okay, is this like the first call you've ever bought? Is the illiquidity looking good for GME to run? Yes. Actually, the illiquidity would already infer that GME is running. That it has been in the process of running, well, for, I don't know, roughly 2 days now. Like, we're starting to revert to mean. So, that's good. Obviously, the tips crossing would be better. Since JPOW is Trump's appointee, maybe he'll do us a favor and raise 0.5 to make Biden look worse and print our puts. I doubt the Fed does 0.5. I mean, it's on the table, but I still kind of doubt they do it. Seeking Alpha, Wall Street Breakfast podcast earnings forecast was conspicuously missing a certain company with earnings this week. Okay. And how do you feel about that? Has it led to you wrapping more tinfoil around your head? Or did you realize that GME is like almost a fucking, like, it's a small cap company and no one's talking about it? Obama put Powell at the New York Fed? No? I believe so, but I can't remember. I think we need a rate related poll. Sure. Because that'll mean a whole lot. And totally influence JPow's decision. What do you think about the top for Nvidia? Hoping to CA average? That's DCA? Dollar cost average? There's 3 letters in that abbreviation that you're using incorrectly. I mean, we may have seen the top. Like JFresh said, $10 billion of call delta fell off the chain. And we touched Gamma Max just a little bit Friday morning. So that could signal the downside. I think there's still some, market maker action that's likely to be resolved on it beforehand. And we may see one higher high still, but I would be patient on waiting puts. The downside is huge, and or I'm patient on entering puts, and probably try to average into them over a few days. I'm not particularly fond of the idea of buying any puts until after the Fed meeting. Sorry it got cut off. Capture some profits this week and go full port puts Nvidia. It's definitely overvalued. We'll see how long it can stay that way. That needs to be 2 polls. What should they do and what will they do? I don't think either poll is actually relevant. May as well ask another question then. What do you think of Netflix? I mean, it's still kind of floating around 300. This isn't really a great opportunity to enter puts on it. It could still like see a retest of 315 to 325 this week. I would probably want to enter puts more in that range. I just got out of my previous Netflix puts the end of last week. It was like right over here. Yeah, I'd probably wait till we're above 310 at least before entering more. I think this can reverse with some of the indices that are probably going to have at least a moderately nice day tomorrow. Although opinions on that are mixed. Does Nvidia and Tesla usually get active reaction during Opex? They can. Their correlation isn't as high. And Nvidia's been running really, really fucking hard lately, so it may not, like, there may not be any, like, volatility obligations being cleared up there at all. So it could, but it probably would be minimal if it did. Tesla could have a stronger reaction than Nvidia. I think the only reason JPOW does 25 and not 50 is because he doesn't have the guts to make people mad with 50. Yeah, well, I mean, he's definitely in a high pressure situation, right? As far as the Fed's concerned, the big contagion is backstopped. He doesn't need to worry about it, which would, incentivize him pushing higher rates. But as far as the public is concerned and politicians are concerned, any continuing rate increases look very, very bad. While he has to, maintain his mandate of maximum employment and price stability, he may opt for the lesser of 2 evils there and go with 0.25. So I don't think you're wrong. At least that way he continues to push forward the Fed's agenda while, making everyone as happy as he can. It's really the easy way out, and I feel like even though it may not be the best course of action, it's the one we're most likely to see. So it's tricky. There's, the market's been heavily propped for like the last 2 weeks via, obscene amounts of ETF call buying, while the bond market gets, rated every fucking day. Uh, I think there's enough obligations that got closed out yesterday that we're likely to see a bounce. I don't know how long it's gonna last. It could be over very quickly. Um, I think the majority of long-term positioning is still on the downside. And I think any kind of relief we see probably won't last long. And that's even dependent on, how we open tomorrow and, futures price action and the VIX going into market open tomorrow could be pretty bad. There's still a lot of fears building over the weekend with CS, with these regional banks. People are, pulling their money out of smaller regional banks and putting it in banks that, present systemic risk. Which is obviously very damaging to our regional banking systems. But what are you going to do when the Treasury says that they'll absolutely insure banks that are that pose a systemic risk, but the maximum insurance will be capped for banks that don't? If the August bear rally was in response to the Fed raising 0.5 instead of 7.5, won't a reduced rate of 0.25 instead of 0.5 this time have the same effect? No, because any rate increase at this point is going to, have an effect on Treasury liquidity, right? Back in August when they were, they did the 0.5 instead of 0.75. Rates weren't nearly as high as they are now. Treasury liquidity wasn't as big a problem as it is now. As we moved into Jackson Hole and they proceeded with 0.75 and then 0.75 again, we're in a significantly different Treasury liquidity and rate environment now than we were back in August. Have you looked at PBI? I have. I kind of like it. A lot of problems there though. Mostly with the management, and if Hestia Capitals succeeds in ousting the current C-suite, and someone comes in and runs the business well, then sure. But right now, it's a huge risk to buy into. Upstart looks pretty good, but I'll go over Upstart, Opex, GME, Fubo, all of that towards the end of this. Was there any new bank meltdown related news this weekend? Mostly surrounding Credit Suisse. I know Deutsche Bank and UBS are both considering offers. Switzerland is considering nationalizing the bank to prevent a failure. I think all of the outcomes for Credit Suisse are going to, it's going to get saved. It presents way too much systemic risk, but whoever takes on that bag of problems better be extremely liquid because it's not going to be cheap to fix it all. When Nvidia drops, you believe it will be a large dive in a day? No, I think it'll take probably quite some time. Remember that people have been buying the shit out of it above $230. Um, they're gonna bag hold, but that doesn't mean it won't drop quickly if institutions start selling it. It's like 66% institutionally owned. I do think it could drop enough, and people have such high cost bases right now that it's possible that fear picks up very quickly. But we'll have to see how that plays out. Some Nvidia investors have been in for a very long time, and they can take the hit. Netflix poopy week? Well, I don't know about poopy week, but at least into the Fed meeting, there's a chance it sees some upside after a significant amount of puts on it closed last week. Oh no, I'm in my puts. I'm looking at more 320, 325. Okay. What are the effects of 0.25 increase beyond the market? I mean, it's only going to compound treasury illiquidity, right? It's going to put even more stress on the banks that are already having a problem with the current yields. I mean, yields will go up. That's ultimately, at this point, any rate increases are going to be viewed as bearish, given the effect of the prior rate increases. I mean, we did 0.25 last time, right? And that led us to the liquidity crunch we're in now. When Fed pauses rates, is that the credit market stabilization you were mentioning would be a bullish catalyst? It could be an initial bullish catalyst. That doesn't mean that the credit market is going to stabilize right away. The credit market will probably stabilize when the Fed starts to repeal rate increases. So when they actually pivot, a pause helps, but a pivot ensures that the credit markets have confidence, right? And that's going to bring back that liquidity into the credit market that will ultimately benefit Upstart. Was there any new bank meltdown? Okay. Did UBS just announce a buy of CS for $2 billion? I don't think so. I think they're making offers. I think they came in with an offer of like 27 cents a share or something like that. Folks are growing suspicious of Deutsche's condition. What might you expect them to do to instill confidence? Announce a buyback, disclose their interbank lending. Zonka. I mean, I don't know if they're going to announce a buyback if they assume Credit Suisse. I highly doubt they're going to disclose their interbank lending. I don't think they give a shit if people are suspicious as long as they're stable. I mean, investors not knowing might be more confident than investors that are informed. I think what people are afraid of is if JPEG got really influenced by the politician and surprises everyone to do a pause, that would at least short term push the market really high. Yeah, it absolutely would, which would, but also that would, pop inflation for over the whole next quarter, right? It's not a good time for him to do that. He knows that. If he was gonna pause rates, why bail out the banks? I don't think a pause is on the table, frankly. I do think they might go ahead with 0.25 just until, sentiment stabilizes and, banks are able to figure out their current liquidity problems. And then they can move forward with higher rate increases in the future. But I think if they do 0.25, we may see them raise the terminal rate. It should already be raised, frankly. These banks need to be broken apart. Yes, they do. UBS offering only $1 billion to Credit Suisse for the lulz. Is there any advantage really for the Fed to do a pause purely to satisfy the politician's narrative? Okay, I went over that. I'm not going to answer the Fed question from 800 different angles. 0.25 is most likely. It's the easiest way to thread the needle and achieve both goals. Strategically, it's their best option. If he goes more than that, he's going to be putting a lot of pressure on the banking system. which he may be more than happy doing. UBS bought CS for $2 billion. Have you seen anything to corroborate that story? I haven't. Are you expecting SPX to chop around 3,900 to 4,000 range till the Fed meeting as people hedge both directions? That's possible. Yeah. I think eventually, like, we've got a lot of put closure and a lot of put delta that fell off of SPX on Friday. I think that's going to, stimulate some upside. I know Charm's a little positive, so the market makers going to be buying in a little bit. I do think, however, that once we find a stable level to the upside, likely below the collar, we're going to stabilize there into Tuesday as delta neutral positioning starts to come in. Because as sure as people might purport being on the Fed decision, they have no fucking idea. Can Nvidia be propped up as overvalued, sort of like Tesla was? Sure. I mean, Tesla had a lot of big drops. But yeah, I mean, it's in a similar situation right now. Nvidia's in 378 ETFs, all of which have increased their holdings by like 13 to 36% over the last 2 weeks. So what you're kind of seeing on Nvidia is like a long squeeze. The price is getting driven up so much that the weighting of it is increasing in ETFs, and they're having to come in and buy at market, and that's driving the price up even higher, right? And then the market maker is hedging up, and then the ETFs are buying, and so it's almost, I don't want to say it's a gamma squeeze, but it's kind of like a long squeeze. Like they just have to keep buying until they hit some sort of stability. That does also mean that if Nvidia gets rugged, it's gonna go down hard as fuck. I have to cancel a membership on the phone and rebuy the membership on YouTube to avoid the Apple surcharge. Yeah. You have to do it on like YouTube's app or YouTube's website, I think. I don't know if that was brought up here, but UPS deal is dead in the water. They have a clause that terminates the deal if CDS moves, if their CDS move 100 BPS. Okay. I still have 4,000 as a price target pre-FOMC. Yes. UBS agrees to buy CS for no more than 2 billion. Yeah, there seems to be a lot of comments on that, but I don't. Let me see. Okay, so they just upped their offer to 2 billion and agreed to a purchase. That doesn't mean that the $2 billion is going to be accepted. It may be that UBS doesn't want to buy it, and that's just their out. But yeah, we'll see how that plays out. The CS situation, isn't it the same as what happened to BAC and Countrywide? You just take on toxicity. Yeah, people seem to conflate bank run based on fear of deposit loss and depositors moving cash to new accounts with better interest rates than the 0.5 a traditional bank offers. Insurance won't fix. Will you be selling CSPs on anything this week? Probably not, given the potential for end of week volatility. So I don't think so. With the banks failing, Bitcoin is pumping. I'm not a fan of crypto whatsoever, but I'm definitely playing Mara until then. Heavy resistance at 30K. I mean, the problem with Bitcoin is if the banks actually fail, it'll crash. But yeah, the Bitcoin pump probably isn't going to be very long lived. Mara's okay. I usually play I played MSTR on Friday. Um, just like at the money 0 DTs at open. Um, that was pretty good. I usually don't play Mara or Riot. They do okay, but they don't do as well as MSTR. Do you get a chance to roll your Nvidia April 21s? Or do you think there'll be another opportunity after Force? FOMC. I closed them on Friday. I'm gonna re-enter them at some point this week. Either at a deep discount or slightly more than I sold them for. So what exactly is happening with ETFs? People are pumping them for liquidity to dump their bags. Kind of. They're buying shitloads of calls on the ETFs. Or, well, I guess they're buying shitloads of calls on equities and then selling shitloads of puts on ETFs. So they're kind of using the ETFs to prop the market while they sell out of equities and buy into bonds. Although that's kind of wrapping up now. Or well, it would appear to be wrapping up as of Friday. Also, FT reported Swiss authorities expect to change country's law to bypass UPS shareholder vote. Thoughts on Google Short? Is it at the top of its descending wedge again? I don't think so. Maybe it is. Might be close. I haven't looked at that in a while. This one's better. It's got a little more room to go up. Like I said, I think Google can test like 105, maybe even retest 108. It's still got a little bit of room left to run. I'll probably start selling some more covered calls on it this week. I'll maybe target like that 97, 98 range again. Hi Greg, happy Sunday. Shifting gears, would you take a few minutes to discuss Hedging Trades 101? I've been lucky to date. I'd like to better understand some fundamentals. Thanks for everything. Buy the opposite position of what you have if you're losing money. There you go. Hedging Trades 101. You're not going to effectively delta hedge without algorithms. You can buy the opposite delta of your position if you want to hedge overnight, or if you're hedging a move against you. You still need stops. Stops are the best hedge if you're actively trading. Always. You can use conditional orders to backstop like negative moves, although not a lot of brokers have that option available. But it's really not that complicated. You know, if you have 2.7 delta on your position, you know, you need negative 2.7 delta to reach a delta neutral hedge. I doubt many of you are going to be hedging, you know, like Vega across a position or anything like that. So I don't think that's going to be a concern for anyone. You can take a more macro approach to hedging your entire portfolio by using short positions on indices or by using the VIX. Although VIX hedging is kind of complex. Suisse accepts being bought out. Would that lessen fear in the banking sector? Maybe? Or just add fear of, spreading contagion to whoever buys them. It's essentially a no bid offer, 1/8 to 1/4 of the price. What's your macro thesis? Further interest rate increases mean further ouchie down downs? I mean, you don't need the interest rates to go up for the markets to go down. Spies at a PE of like 25 inflation adjusted right now. It's extremely overvalued. Margins are still collapsing. And tech hasn't even moved into its quarter 1 earnings yet. So, those margins are only going to contract even more, especially as, GDP slows and unemployment rises. There's no bullish outcome to any of this in the long term. This is all just about as bearish as it gets. A recovery will be extremely drawn out and take a long time. Inflation is unresolved. The labor market remains far too robust. Price stability is out the window right now. And, layoffs can only continue for so long before the realization that, none of these companies are making nearly as much money as they were before comes in, right? So, I mean, those contracting margins are an inevitability at this point with the rate increases we've already had. Catching up 1.75x. So my thoughts is JPAC comes out with 1.25, hawkish with remarks in his post-meeting press conference. Hopium Monday, Tuesday with a big slap on Wednesday. We'll see. Any advice for how to play FOMC during a work meeting till 3 p.m. that day? I'm thinking of buying end of April, early May puts, 3,800 with a hedge, March 24, 420C, stops at 25% on both legs. Okay. My only problem with that is you could potentially lose both sides of the leg before a direction is chosen. Like, you can lose both legs. You can get stopped out of both before a direction is picked. I don't know how much volatility there will be on the decision, but there could be a lot. No matter what I do, I agree. I'm not going to hedge the upside with nearly as much theta as the downside. And that way, if the reaction is slightly bullish, I can carry out for a few days or a week. Any reason we get GME run to not play it like a normal Opex, sell them CCs when crossing GM, and be mindful of the initial Opex spike and then follow up spike 2 days later? Yeah, the FOMC could crush all of the market maker obligations over the continued T+2 price action. So, while we might run Monday, Tuesday, or maybe just Tuesday, it's unlikely we'll see this run if the Fed meeting is bad. First of all, there's not a lot of options interest on the chain, so we may very well run up, hit the FOMC meeting, and then come right back down again. Also, something I feel like I really need to address, because I've seen it far too much on the Discord. You fuckers are not all going to be able to sell deep in the money covered calls. I don't know who the fuck you think is buying these, but everyone seems to assume that they're going to be able to full port into like $10 calls at 20, and you're out of your fucking mind. This is never going to happen. You might get one fill if you're fucking lucky. You can sell in the money covered calls, and the reason Gamma Max kind of works is because the market makers are still buying like at the money. They're still buying like 0.6, 0.65 delta calls, right? So they'll pick up your calls, like $2 to $5 in the money. they're not going to buy your fucking calls from you $10 in the money. If they do, they're going to buy it at such a massive discount that they're going to exercise it immediately, like the same day you sell it. You can sell a few in the money. You might get fills on most of your position if your position is small and you're in a tight range. But the chances of you selling your entire position, if you're, even if you only have like 1,000 shares, the chances of you selling your entire position $10 in the money is fucking ridiculous. What ETF has 36% Nvidia? I said they increased their holdings by 36%. Not that their total weight was 36%. QQQ has increased its holdings of Nvidia by 23.7% as of last Thursday. I don't even know what they hit Friday morning. Assuming a 25 BPS hike, do you have an updated SPX chart prediction ranges into April? Not yet, but I will tonight. Besides bad earnings, bank failures, the higher cost of borrowing, what other bearish or bullish things should I consider to help me understand 1 to 2 month directions? ABS could have an effect over the next 2 months. That might be something to consider in your macro. There was a bill for something that they're trying to pass. The tax reform bill. I don't think it's gonna get anywhere, but that's something that's being pushed. Bank of Japan. China's holding a significant number of U.S. treasuries as well. Illiquidity in the treasury market could drive, if it's bad enough, it could drive maybe China to sell. Japan will be more hesitant to sell than China, although they have a greater need to sell their U.S. treasuries than China does. Yeah, that's probably good enough. Curious how you think the bullwhip effect plays into this inflation we're seeing. Follow up, isn't it possible that big enough bullwhip effect can give the illusion of inflation? Yes, it can for brief periods, mostly on producer side. I mean, I think we've yet to see the full effect of the bullwhip play out across the retail sector or like the consumer side of things. But inventories are starting to grow, so we can't be too far away from that now. That'll be deflationary. Except we're not seeing inventories grow in housing and rentals, right? And so housing costs remain really, really high and are really propping up CPI as well. So until unemployment rises and housing costs start going down, we're likely to stay fairly stagnant, right? I have the same number of April, especially considering that when they changed the weighting, they increased the weighting on housing. Shelter. Gork, I have the same number of April 21 400C and 380p. I plan to sell 400C on a test of 400, then average down puts. Am I doing good? I mean, be prepared to sell before a test of 4,000 because you may not see 4,000. But yeah, it sounds like you have a decent plan. 3080 for April. I mean, if the Fed moves forward with any dovish plan, I would at least have some stops set on those because you'll be able to reposition them much cheaper later. Fucking insane. When's school stock videos about GM, DN, VN? Never. FOMC is 2 p.m. Can you see the market running until the meeting results? I don't know if it'll run until the meeting results. We'll probably be fairly stagnant into the meeting. Generally speaking, there isn't a lot of price volatility going in to FOMC decisions. Usually the delta neutral positioning kind of strangles all of the price volatility out of the market. Sometimes we'll drift one way, depending on how, well, two things, but mostly depending on how heavily positioned one side is versus the other. So, you know, if call side is favored, going into lots of delta neutral positioning, as puts are bought, you know, prices will start to drift down into the lower range. This can also be an effect of, you know, them trying to pad the outcome, but I don't think we're going to see that this time because it's so uncertain. But yeah, you'll generally get drift in the direction that needs, that has more buying occurring. Housing is at peak illiquidity, same with autos. Is the Nvidia thesis in the country club? If not, what time frame are you thinking of for on the puts play? I'll probably re-enter some April positions over the next few days. My May positions I'm keeping, June, July, and September I'm keeping all of. Probably adding to some of those. So averaging those down over the next few days, re-entering April's either at a higher strike, given how much we've moved up, or I'll just target a cheaper price. If I target a cheaper price on re-entering the April calls or puts, it's going to be because the Fed decision was hawkish. And I wouldn't enter those till after the Fed decision. If I enter any other Aprils before the Fed decision, those will be nearer the money. So I'll probably target 250 to 235 before the Fed decision, if there's any good opportunities to get into those, and then I'll target like 220s, 200s after. Although my 200s were already split between April and May, so I may not buy more April 200s. Are you excited for this week? Seems like the most anticipated week since I've been here. I kind of am. I'm a little nervous. There's so many variables right now that it's like it's really hard to get a good pulse on everything. So I'm gonna stick with the data and see how that plays out. Over the last 2 months, you've mentioned how the market hasn't seen the full effect of rate hikes. Can you elaborate on that? Are bank failures an example of what you meant? They're part of it, yes. And the effects on banks are going to worsen over time. But also margins are going to come down significantly. The cost of new capital is going to come down, and growth is going to become stymied. Right now we're still seeing a fairly robust GDP. We're still seeing a lot of growth. Well, we're seeing a lot of growth priced in the market. That growth really isn't there anymore. And you know, currently forward valuations on a significant portion of the Nasdaq 100 and the S&P 500 are very, very much out of line with their actual rate of growth and their forward earnings. So there's going to be some realization of that has yet to occur, and yeah, we're going to see those margins contracting as we move into a slower economy. Yeah. At some point, VIX got a squart, right? There's so much volatility on it, fear in the market, and call interest. How can they possibly keep it under control unless we run to 12,000? I mean, VIX closed Friday at 2550. They can get it back below 20 pretty fucking fast. If we move up to 40, 50, 40, 65, VIX will probably be back at 20, if not below it. After the Fed rate info, are you going to get any longer term puts like September or later? Probably. As I think most of you are already aware, my only real downside exposure on SPX right now. The largest part of my downside exposure on SPX right now is my straddle that I opened on Friday. I got 100 contracts in either direction and just went straight delta neutral because there's so much uncertainty this week. I will probably, hold that straddle possibly into the Fed meeting because I bought a decent amount of theta on it at 331. I may trim from it as price realization occurs. So, if we drop, I'll trim 20, 25 contracts. If we go up, I'll trim some contracts and just slowly take profits on it as it continues to keep me hedged in both directions into the Fed meeting. After the Fed meeting, I'll probably start to look to position further out. I don't know about September. September's like a really, really long time to be buying puts for right now. Unless I was going to buy them really, really far out of the money. And that's more of like a Vega position than it really is, the expectation that we'll see those prices by then. Just because, like, by the time you're halfway through the position, the cost of holding is going to just incentivize closing it at any point that it's profitable, right? How are bank runs bullish? They're not. There's nothing bullish going on. Is it good to set stops like 10 minutes before the FOMC meeting or wait until after a direction is confirmed? I mean, it's risky to set stops before the meeting because it can take a minute for the direction to be confirmed. Yeah, it gets kind of too volatile right away. Generally, I pull back stops before the meeting and then try to start closing out some of my positioning during the volatility spikes, and then the rest once a direction is picked. We getting pickles picks tonight? Yeah. Yeah, there's some stuff. Ivy's going bananas this week on everything. Well, Opex was huge. It was like $2 trillion worth of derivatives, right? Do you plan to chase out a lot more positions, especially if Jimmy's earnings came better than expected and the run accelerates? I mean, you mean besides my like almost 200,000 shares? I suppose I could. Yeah, I'll probably, like, if we get volume on GME, I'll probably pick up some shorter dated positioning. Right now, I still have April and May, 20, 25, and $30 strikes. It's like roughly like 325 contracts. And then I have synthetic longs at 16 and 20. Both of which I kind of wish I closed last week, but the synthetic longs. Do you plan to chase to add a lot more positions? We're coming up at the end of Q1 2023. Can you see any potential actions companies may do that are extreme to keep EPS up, hold losing securities rather than selling and realizing losses? We may see M&A. I think we're gonna start, especially if we see a steep drop in indices, and we see a more fair PE, like overall market PE. We may start to see M&A pick up. We may see an increase in share buybacks. We may see more layoffs. Those are probably the three biggest things we'll see in an attempt to pad earnings and try to uphold positive EPS. M&A is great, especially if we start to see it out of big like value dividend companies. I I know I'd love to target some of those plays if they become available. There's a lot of utility companies, telecommunications companies, energy companies sitting on big fat piles of cash and really just paying dividends and buying back shares with it. And some of those may seek to pursue more aggressive growth in a lower PE environment, and that could be very attractive. Credit Suisse hasn't been bought by UBS. I believe they've placed an offer for 2 billion. I don't know if it'll be accepted. I think there's going to be a lot more deliberation before you have a final word on that. You're gonna stream the Swiss press conference in 40 minutes? Absolutely fucking not. With our luck, Opex runs will start Wednesday morning, get killed the same afternoon by a bearish Fed announcement. I mean, like I said on GME, it kind of looks like Opex has already started a little bit. We have some momentum. Um, we saw that 900 some odd thousand shares being bought into close on Friday. That was pretty bullish. Drove up IV a little bit. We may see. Here's my concern with Opex on most of the basket, is it could be very short lived. I don't think retail options interest to the call side is very high, so I don't think Opex runs are extremely sustainable right now, and I think that the amount of obligations due could be realized very, very quickly. And if that's the case, we can end up with something more akin to like October 31st than something like March of last year, right? And even though obviously March of last year would be awesome, with the macro environment, the chances of that happening are slimmer. Now, don't get me wrong, if the Fed fucking halts rates and shit, we might get like a full on big fucking March OPEX, and that would be awesome. But be prepared for that not to happen, right? Pay attention to your positions over the next few days. I already have the feeling that people are going to lose a lot of money not being on top of their shit. UBS wants Credit Suisse for free, and for all the risky shit to be taken on by SMB, they're offering 2 billion with 100 billion liquidity injection to SMB to sweeten the deal. How can they dump their bags on the bondholders for Credit Suisse? Isn't that not the point of a bondholder? We'll see what happens. Here you can start now. I think you've missed most of it. There's gonna be like 10,000 jobs lost if they merge. Yeah, I saw that. I mean, at least they're in Europe. I feel like their unemployment's probably better. Upstart, I wouldn't say that it's started a run yet, but just because liquidity pulled back after that initial bounce off 14, it does look good. There's plenty of room for it to run. We'll see what happens there. I have $15 synthetic longs, like about 100 contracts. I think that's about all I have. Well, 100 sold. I bought 200. So 2 to 1. And then Fubo's kind of interesting. It's so low priced that I'm not really sure how much of an effect the options chain is going to have. Someone bought $13,000 puts for next week. And as those decay into expiration, they're going to or they sold 13,000 puts for next week at 150. The setup looks moderately similar to the period we saw leading into the August run, liquidity wise, but with significantly less pressure. I think most of the downside price action since their earnings has been fairly heavy shorting. primarily that's, you know, atomic and the rest of the pickle jar. But as covered calls are pulled back, which I think a lot of them were, I know mine were on Friday, that'll relieve some of that downside pressure, and we'll see what happens there. It can pick up a lot of volatility really, really fast, though, so it's kind of an interesting one, especially with like leveraged synthetic longs, because you're so massively exposed to like increases in implied volatility, and you have all that fat Vega, right? That you can really make a shitload of money on a very small move. When does tech quarter 1 earnings come out? When's Amazon? Uh like end of April? Beginning of May? I think bank earnings come first. Baba? What about Baba? I if Baba bounces this week, I'm shorting the fuck out of it. Like on the technical side, this looks bearish as shit, and like it's gonna go down to $60 again. We getting some dork JFresh action today? I don't know. Are you guys around? Probably not. I've got shit to do. I barely had time to do the member stream today. Do I have time for that? I have to be in Brooklyn by 3 o'clock. Probably not. I mean, they'll be on the Discord talking shit. How's Nvidia? Well, it dropped 10 billion in call delta on Friday after it tapped Gamma Max. So hopefully not going to go up a lot more. But remember, it can still T+2. So we may see another retest of Gamma Max before it completely falls. I wouldn't rush right into puts. I would be patient. Don't worry, there's plenty of downside. The fucking company's trading at like almost like 150 PE or at 150 PE, which is absurd. If we get a full-on March-style Opex in accordance with JPOW pausing rates, how high do you see GME could top? Also, if that happened, then you expect the index... Sorry, 1 second. Probably run into late April, then like down in June. Not necessarily. I would say that if that happens, the indexes might have like a week or two, maybe just a week of upside on them before more put positioning comes in. GME, I think Gamma Max right now is around 24. That can move up $3 or $4 in the next 2 days. If we get a real full-on Opex, that might go up another 5. So you could see like a Gamma Max potentially of, you know, like and this is completely speculative, right? Because we may not get this at all, but if we were to get a repeat of last year, and we already aren't, because the amount of calls on GME are significantly lower. I would say $4, so it'd bring us up to about 28, maybe 33. You know, So that would put a peak price at like 37, 38, 59. You look at FSLR, it looked like it was really dropping nicely. It has been. The energy sector getting murdered has finally done a little bit for my longer dated FSLR puts. It's starting to pull back towards 200. Obviously, I've picked up some more puts on this. I think I have some 210s and 200s now since I last updated the position. My targets for September are still the same. A midpoint of 145 with a PT of 128. I don't know if we'll hit 128 by then, but we could. Yeah, I'm just chilling mobile for a bit. Ironically, not as much has changed over the last week macro wise. JPOW has every excuse to go 0.5, but I expect 0.25. Boom, guest appearance done. Yeah, that's kind of where my head's at too. Is there somewhat conservative play for a market downturn besides sitting on cash? Inverse ETFs? Yeah, you can invest in inverse ETFs. You can invest in things like that have negative beta, like gold. Oil's really fucking cheap right now. I might start picking up some more Oxy exposure this week. I'll discuss that, but is now a good entry for Fubo synthetic longs. It was better 3 days ago before IV started ticking up. Do you think there's a good chance of a change in the terminal rate? It seems silly to not do that if Powell only does 25. That's kind of what I'm thinking, is if he does go with 0.25 or a pause, he needs to address the terminal rate being too low. Because inflation swaps are still trading at like 6, right? And currently our terminal rate's like 525, which is way too low. So yeah, it'd be good to see them move that up. If they can, at least then they can rein in speculation a bit. And kind of trim down the effects of people getting too bullish on 0.25. If best case scenario on peak GME at 37.38, more likely estimate 30.32. No, my conservative estimate right now and current target is like maybe 25 to 27. Let's talk Bobby, baby. Reverse split, same like Moas. No, although reverse splits are nice when you don't announce them ahead of time and warn all the shorts about them. A reverse split doesn't need to be announced at all. Like we saw with, oh god, what was that pile of shit company that we traded the reverse split on? Cosm, where they just market open, hey, we're splitting our stock. That kind of reverse split can have a very positive effect. Bobby's already diluted like 300 million shares. It's liquid as fuck. A reverse split's not going to change that very much and is going to lead to just even more dilution. It's a dead company. It's a piece of shit. I know reverse splits don't force shorts to close. What they can do is trigger a share recall by institutional longs, but no institutions are like long Bobby outside of ETFs. Cosm was amazing. Don't knock it. That shit went up like a fucking so much the next day. And then people kept playing it like idiots. This seems like a part in the margin call. We're waiting for the first big boy to hit the sell button. When will Larry do this? I don't know. I'll ask him at the barbecue later. I don't see how volatility of half of the world calling for 100 BPS cut and the other half calling for a terminal at 6% is helpful for Powell. Yeah. I mean, he should just keep doing what he's supposed to do and ignore everyone else. He backstopped the banks. There's really no excuse for him not to move forward with a stronger rate increase at this point. Inflation's flat. There's contagion risk in the market, and inflation needs to come down. Unemployment's still way too high. Or well, low. Not high enough. Don't forget that we have jobless claims in Japan inflation. BOJ should not be forgotten about. They have a new administration coming in, and that might take a more aggressive stance on QE. We'll see. I mean, my yen longs and Nikkei shorts really fucking hope they start to tackle a policy of at least lighter quantitative easing as they attempt to reduce the margin between their producer and consumer inflation, because it's fucking ridiculous at this point. I really hope they just come in and pin the yen and the yen short squeezes into oblivion. And I don't do this anymore. I'll move on. Start my own investment bank. I backheld 20% of my Cosm position. It's still one of my most profitable trades for the year. The other being Cat. You're welcome. Lies, Larry doesn't go to Brooklyn. Okay, it's a piece of shit, but where do you see the price landing for Baby? Well, Baby is owned by the fucking debtors now. It's just as worthless as the rest of the company. Why is everyone diving into bonds? Because the returns are greater than the assumed returns on equities. With banks getting essentially free insurance on all their bad decisions, does that make 0.5 more likely from the Fed? What is likely market action from this decision? If the Fed moves forward with 0.5, the market's going to take a big fucking hit. RC sold his Bobby. Do you sell 1 month CCs on GME after an Opex run, or do you sell longer dated? I sell a bunch of different dates because I have to sell a shitload of calls, and I can't sell them all at one strike. $2 billion in Dogecoin. There's an incentive to hit the terminal rate at this meeting and then pause further hikes. I agree. As far as the Fed is concerned, and they should not be influenced by politics or bank failures. They should move forward with 0.5. We should hit our terminal rate, and then they can pause, right? Which, I agree with you. It grants the stability in the upper range, and that way, both goals can be said to be being accomplished. However, if Powell goes with 0.5, they're going to accuse him of killing the banking system. Recommendation for people with about 1,000 shares. I mean, you can sell covered calls on them. You can sell shares. You can do whatever the fuck you want with them. There's not a lot of options holding shares. I mean, that's pretty much it. You either sell the shares or you sell covered calls. If you believe in the future of the company, you should probably hold your position. If you don't, then do what you will. Yeah. All right. If anybody has any questions that they didn't get to ask me on the stream today, DM me on the Discord. I will be around later tonight. I just have some errands I have to run throughout the day today. But I'll be around tonight. Pickle's picks will be out probably pretty late. I'm gonna want to watch futures and foreign markets for a little bit before writing anything up. Thank you guys so much for tuning in. Of course, I'm gonna stream GME earnings. And I will see you guys bright and early tomorrow morning. Get some sleep. You're gonna need it. Later, guys.
Kenny's Mayonnaise is a proud sponsor of Pickle Financial. So